Yes, please. Now see the next question. Rayan Limited provides the following information: determine cash flow from financing activities. Equity share capital opening balance is 10 lakh and closing balance is 15 lakh. 10% debentures opening balance is 1 lakh and closing balance is 0. 8% debentures opening balance was 0 and closing balance is 2 lakh. Now interest paid is again given in this question. So for us, this 8% or 10%, this becomes irrelevant for us because interest itself is calculated and question has told us what amount of interest has been paid. Dividend paid, obviously equity share capital is there. We are paying dividend 50,000. That is also to be considered in financing activity. During the year 2019-20, Rayan Limited issued bonus shares in the ratio of 2:1 by capitalizing reserve. This information is very important. Now first see the balance of equity share capital is increasing from 10 lakh to 15 lakh. So there are various possibilities. First possibility is that we are issuing shares and we are receiving cash. So if we are issuing shares and we are receiving cash, then it will become an inflow of financing activity. But if we are issuing shares as bonus shares, then it cannot be a source of financing activity. How it can be? Just see. Question is saying Rayan Limited issued bonus shares in the ratio of 2:1. Means whosoever was having two shares of Rayan Limited, he has been given as one share as bonus. For having two shares of Rayan Limited, the shareholder has been given one share as bonus. Now, how bonus shares are issued, that procedure should be clear to you. Only then you will be able to decide what to do. So, bonus shares are always issued out of profits, undistributed profits. So, whenever company feels that we are having a lot of reserves and we don't have any liquidity regarding to pay these reserves as dividend. So what they generally do, they convert these dividends, they convert these reserves into their capital. So whatever part they are having as reserves, if you will see shareholder fund has two components. One is share capital and one is reserves and surplus. So there are a lot of funds lying in the reserves and surplus, and what has been done, only the funds available in reserves and surplus has been converted into equity share capital. That has been done. Now I hope you are clear about the process of issue of bonus shares. You don't have any confusion regarding that. So means whenever company will be issuing bonus shares, first thing, what are the source of issuing bonus shares? The sources are reserves and surplus, the reserves lying with the company. And because these reserves belong to the shareholders, so company has, instead of paying the cash to the shareholders as dividend, company has issued shares in exchange of that reserves to the shareholders. So company will not be charging any amount while issuing bonus shares. Company will not get any amount of cash when it is issuing bonus shares. So this point is clear. So that's why their earlier capital was 10 lakh, and because they have issued half of that as bonus shares, that's why 5 lakh has increased in the capital due to that. So this increase of 5 lakh is actually not a cash inflow. Is this point clear? Why it is so? Okay. So capital is increasing from 10 lakh to 15 lakh, but you are not getting any cash and cash equivalent. So that's why it will not be considered as inflow of financing activity. It is just conversion of reserves into equity share capital. Then 10% debentures. The opening balance was 1 lakh and closing balance is 0 now. So when the closing balance can reduce or it can become 0, the situation is only one, that you have redeemed these 10% debentures. So here I will write redemption of redemption of 10% debentures one lakh. Now second thing is, and it is outflow. Redemption of debentures is outflow. That's why it will be written in brackets. Next information is regarding 8% debentures. 8% debentures where opening balance was 0 and closing balance is 2 lakh. So that means that fresh debentures has been issued in this year, which will be carrying 8% interest rate, and the total amount collected from them is rupees 2 lakh. So here I will be writing the inflows separately. Proceeds from issue of 8% debentures. The amount is 2 lakh. Okay. Now, third information is given in the question, interest paid on debentures. So interest is paid, it is an outflow of financing activity, that we will write here in outflow. Interest paid on debentures, and that amount is 10,000. Dividend paid 50,000. So dividend paid 50,000. So we have used all the informations. We have noted all the outflows and inflows. Now the total outflow is 1,60,000 and total inflow is 2 lakh. So because inflow is more than outflow, it will result in cash inflow from financing activity. And the net flow will be how much? First we will write here cash flow from financing activity. 2 lakh minus 1,60,000, 40,000. So 40,000 will be the answer of this question. I hope the whole process is clear. This is also a very simple part of the question. So investing activity, little bit calculations are there, but otherwise it is also a very simple part. Now we are proceeding towards attempting the full-fledged question. one question of cash flow you will be getting in your practicals to be attempted of 6 marks, and one question of cash flow you will be getting in your final exams, board exams. Weightage will be of 6 marks. This chapter is of 8 marks, so 2 marks you will be getting in MCQs. Now, when you have to prepare full-fledged cash flow statement showing all the activities, operating activity, investing activity, and financing activity. So at that time, what is the procedure to be followed? So I have told you various steps of preparing cash flow statement also. So step 1 is that you have to calculate net profit before tax. For that we have discussed in detail. Then second step is you have to adjust the non-cash and non-operating expenses and non-operating incomes like depreciation, goodwill written off, other intangible assets written off, bad debts, loss on sale of fixed asset, underwriting commission written off, or share issue expenses written off. So lot of things, non-cash and non-operating expenses are there that has to be added back. And similarly, if you are having some non-operating incomes like interest received, dividend received, rent received, that all non-operating income should also be deducted. In step 3, you have to adjust the increase or decrease in the current assets and current liabilities. Then you will get cash flow from operating activity. But from that also you have to deduct the income tax paid, net of refund. Then you will get cash flow from operating activity. Then in step 5, you will be attempting investing activity as we have done yesterday. Then we will do in step 6 cash flow from financing activity. Then afterwards getting cash flow from operating, cash flow from investing, and cash flow from financing activity. When we will get all these things, then we will find out the net result of these all three, and that is called determine net increase or decrease in cash and cash equivalents. Suppose operating activity answer is coming rupees 10,000. Suppose cash flow from investing activity is coming rupees 20,000. And cash flow from financing activity is coming suppose 15,000. So the means is 30,000, 45. So the total is 45,000. So net increase is 45,000. Increase will be written without brackets and decrease will be written in brackets if this is the situation. So we have to find out the answers of all the three activities: operating activity, investing activity, and financing activity. And then we will add them all. If suppose cash flow from operating activity is 10,000, cash used in investing activity is suppose 5,000, and cash flow from financing activity is suppose 15,000. Then what will be the net answer? 10,000 plus 15,000, 25,000 minus 5,000. So the net increase will be 20,000. So you will find out first these three answers, and on the basis of these three activities, operating, investing, and financing, the final answer of these three activities will be added, and you will find out the net increase or decrease in cash and cash equivalents in step 7. Then in step 8, you have to get from the balance sheet the opening balance of cash and cash equivalents. Suppose the opening balance of cash and cash equivalents was 40,000. That you will get in balance sheet, which is provided to you in the question. And when we will add the net increase or decrease in the opening balance of cash and cash equivalents, we will get the closing balance of cash and cash equivalents. So suppose here my answer will be coming now 60,000. In that situation, in the balance sheet also the balance of closing cash and cash equivalent should be 60,000. So if it is coming in the same manner, that means you have almost attempted the question correctly. That I was telling you in the first class, that in this chapter you will be able to decide whether you have attempted this question completely correct manner or not. So now these are the steps to be followed, and we have learned these all steps. Calculation of cash and cash equivalents has been discussed in detail in the beginning of this chapter. Operating, investing, and financing activities we have completed. So nothing left for this chapter. Only I will be showing you the format which you will be using now. So here we will write cash flow statement, and the method which we are using is actually it is indirect method for the year ended as per accounting standard 3 revised. This will be an inner column for whatever calculation you were doing till now, that will be written here, and only this column will be used for final answer of each activity. Like we are calculating cash flow from operating activity, the first part of cash flow statement. Whatever calculation I am doing, that I will be writing here. 20,000 or loss on sale of fixed assets, suppose. So whatever amount I am getting, I will be writing it here. So then these are the steps that you have to calculate in step 1, net profit before tax and extraordinary items. Then in second step, you have to add the non-operating and non-cash expenses. The list has been given here also. Then in the third step, you have to, in the second step only, you have to subtract the non-operating incomes also. You will get your operating profit before working capital changes. And in this operating profit, you will add the decrease in current assets or increase in current liabilities. You will subtract increase in current assets and decrease in current liabilities. So finally, you will get cash generated from operations. 3 steps has been completed. In the fourth step, you have to adjust the income tax paid, net of refund, and then you will get your cash flow from operating activity. If some extraordinary loss or receipt is there, like you are receiving insurance claim or you are having some loss due to fire or theft, that all will be again adjusted here. If loss is there, you will subtract that. You are receiving some extraordinary income, you will add that. Now cash flow from investing activity. So whatever tangible and intangible fixed assets you are selling, you are receiving any money, you are selling any investment, you are receiving any loan given or advance given, then you are receiving any rent, dividend or interest, that all income of investing activity. And if you are purchasing any tangible or intangible assets or any outflow is there, you are giving any loan, these all will be reduced. So these amounts will be written in brackets. Keep it in mind. So whatever final answer you will be getting, that will be your answer for cash flow from investing activity. Here the answer was cash flow from operating activity. These final answers of each and every activity will be written in the later column. Nothing will be written here. Otherwise, whatever you have to add, either you will write it here in the inner column or you will write it here. Similarly, cash flow from financing activity, just now we have completed in the previous lecture. So whatever inflows are there or outflows are there regarding capital or borrowing funds, that will be added or subtracted, and we will find out the cash flow from financing activity here. Now we have got these 3 answers: operating, investing and financing. And on the basis we will add these 3 and we will get cash flow to net increase or decrease in cash and cash equivalents. Then we will add the opening balance of cash and cash equivalents given in the balance sheet. These all are the components of cash and cash equivalents: cash in hand, cash at bank, check in hand, short-term deposits, marketable securities. These all will be treated as components of cash and cash equivalents. So the opening balances of these all will be added and will be written here. And now this opening balance will be added with the net increase or decrease, and we should get the closing balance of cash and cash equivalents in the answer. So if we are getting same balance as given in the balance sheet, then we can say that our question has been solved correctly. Yes, please. If you have any doubt regarding cash flow statement, this is a very long format. You can see it may be confusing you, but because you have all completed this all sections separately, so you should not feel confused. If you will check your book, it is given this format we will find on 2 pages, because they have written also a lot of things. I have written the major ones which you need. If you feel any query regarding cash flow statement, because now from my side it is about to complete, we will just solve 1 or 2 questions for practice to give you an idea how to attempt the full question. Rest you have to do practice and you have to complete the chapter.